Imagine waking up one morning to discover that billions of dollars worth of American ships have just been seized in one of the most remote, frozen corners of the planet. And that move just snapped open a geopolitical door the world thought was locked tight. That's the story today. Russia seizes roughly 3 billion in U.S.-linked vessels in the Arctic, a region long idealized as a place of peaceful cooperation, but now turning into a new flashpoint with implications for global trade, energy markets, and even the price of gold and oil. Think about it. What happens to global supply chains when international waters become contested territory? What happens to markets when a major military power flexes its muscles in a place where icebreakers used to be the heaviest gear around? In this video, we're going to unravel what's really happening beneath the headlines, connect the dots between geopolitics and your wallet, and break down why precious metals like gold and silver suddenly matter more than ever amid rising tensions. From the historical treaties that shaped Arctic cooperation to the latest satellite imagery showing new naval deployments, we'll explore how this crisis could redefine national security, international law, and even investment strategies for anyone watching from New York to New Delhi. But before we dive in deeper, let me ask you this. If the Arctic is becoming a new center of global power plays, are investors ready for the financial shockwaves it could send through commodities markets? Trade. The sudden seizure of these vessels isn't just a dramatic headline, it's a signal that Russia is actively reshaping Arctic rules, and trade routes that were once considered safe are now anything but. The Arctic holds nearly 30% of the world's undiscovered natural gas and 13% of untapped oil, which makes control over shipping lanes and ports here a massive economic lever. Imagine a gigantic icy highway where tankers carry billions in oil and gas, but suddenly one lane is blocked, and the toll is political, not monetary. This move also raises questions about the U.S. response both militarily and economically, and how sanctions, counter-seizures, or rerouted shipments might ripple through global markets. Investors are already eyeing gold and silver as safe havens because, historically, when geopolitical risks spike, precious metals shine brighter. But it's not just about metals. Think of shipping insurance premiums skyrocketing, energy futures becoming unpredictable, and even grain exports potentially delayed as Arctic routes are reconsidered. The stakes are compounded by historical context. During the Cold War, the Arctic was already a theater for strategic dominance, but it was mostly a game of deterrence. Now, economic interests are front and center, and technology like icebreakers, autonomous vessels, and satellite surveillance is changing the chessboard entirely. Every decision, from a naval maneuver to a trade sanction, now has direct financial consequences that trickle down to businesses and individuals worldwide. The immediate consequences of Russia's seizure stretch far beyond the icy waters themselves and into global financial systems, commodity markets, and geopolitical alliances. Oil prices, which were already volatile, could spike further as Arctic shipping disruptions force energy companies to reroute tankers along longer, riskier paths. Natural gas markets may feel the squeeze too, especially in Europe and Asia, as supply chains strain under the weight of uncertainty. Investors are watching precious metals closely because gold and silver historically act like shock absorbers for portfolios during crises. But here's the twist. The Arctic crisis adds a geopolitical premium to these metals that you don't normally see with standard market fluctuations. Beyond the numbers, there's the human and political dimension. Crews stranded, international negotiations heating up, and nations rethinking alliances in real time. Comparisons to past events, like the seizure of the Iranian oil tanker Grace 1 in 2019, help us understand the scale. Just like that incident disrupted oil markets and sent ripples through currencies, the Arctic situation could trigger longer-term strategic shifts. It also forces companies to reconsider risk management, insurance costs, and even long-term investments in polar logistics. Every new Arctic expedition, every satellite flyover, and every diplomatic note exchange now carries weight that can be measured, not just in dollars, but in global stability and investor confidence. In summary, Russia's seizure of $3 billion in U.S.-linked Arctic vessels is more than a geopolitical headline. It's a financial and strategic earthquake with far-reaching consequences, from disrupting trade routes and energy supply chains to sending investors toward gold, silver, and other safe havens. The crisis highlights how intertwined global markets and geopolitics have become. Historical precedents show us that Arctic conflicts are not just local incidents but catalysts for broader economic and security recalibrations. As nations navigate icy waters both literally and metaphorically, the impact on global trade, commodities, and investment strategies will unfold over months, if not years, reminding us that even the most remote corners of the world are never truly isolated from the forces shaping our financial future.